Good morning, folks, and welcome back to Almus Market Mornings. A few words, and that was as usual enough to rattle the markets. That's probably the power of the seat, but the cost of the power, of course, is quite high. Now, it started with President Trump at the NATO summit expressing his belief that the MOU is over and there was no point in negotiating with the Iranians. This and the continued strikes have really put the MOU under stress. And to be very honest, I don't even know if the MOU is relevant now. Markets, of course, gave their reaction. Oil prices rose, yields went higher, stocks were lower, even gold was lower. But a lot of people still hold the belief that that this we can come out of this, and we have seen President Trump reverse his statements before. Good morning, JK. What does your wisdom say about this situation? Do you think the MOU is still relevant, or this is just some sort of a tactic to put pressure on the Iranians?
Good morning, Swaraj. See, I think despite strong reactions that we've seen yesterday to the unsettling developments, uh, neither US nor Iran, or at least the official side of Iran, are interested in a major escalation. Although the militant faction in Iran will remain a thorn in the path to sustainable peace. So I think the markets will get used to these hiccups. And yeah, as you mentioned, there could well be a reverse statement from Trump in the coming sessions, and the market could see reversal of the entire, the volatility or the big negative reaction that was seen yesterday. Uh, so, in fact, if you recall, so that only on Monday we were searching for market moving factors, as this was one of the weeks where the economic calendar was bare, and hardly any events were also looked ahead to. However, I think now we have got more than what we could digest, both in terms of news and volatility. Of course, right from Tuesday, we have had these tensions in the Middle East, attacks initially by reportedly by the IRGC, and then the reaction from US forces, and finally, Iran also retaliated, targeting US military facilities in the Gulf. President Trump declaring that the interim ceasefire agreement was over, adopting a more confrontational tone, warned of more US strikes, and even simultaneously revoked the temporary waiver that they had allowed to Iranian oil exports, effectively restoring maximum economic pressure on Iran. Yes, I think, as you said, this could be, uh, one of the pressure points from US on the Iran side. However, Iran is not, cannot be taken easily, and these, I think, tensions cannot be overcome totally. To go towards a sustainable peace. And of course, there will be more contributions from Trump for the market tensions. On the sidelines of NATO meet, while he's reiterating his strong statements on Iran, he also criticized Spain for not supporting US during the war on Iran. And he also said that Treasury Secretary had been instructed to halt all US trade with Spain, and adding that he wanted no business with that country. Of course, Spain dismissed the comments, while other European officials rather kept a quiet stance, no reactions. But all you can say is the NATO unity is somewhat strained already, and that did not need this. Trump also revived his long-standing claim that US should control Greenland, arguing that Greenland is strategically vital for US security and should be controlled by US and not by Denmark. So for markets and diplomacy, these comments reinforce the perception that Trump is taking a more confrontational approach on multiple fronts. So it's very difficult for us to rest our, as far as the markets are concerned, volatility is here to stay. Obviously, we have had huge reactions from oil, which has already risen more than 10% from the low it hit on 3rd July. And accordingly, the yields have risen, to highs very easily. And as I said yesterday, yields react much more to rise in price of oil rather than coming off due to the price of oil coming down. Now, one more thing, beginning of the week, we were saying the FOMC minutes is one of the most important events of the week. However, it did not provide anything new for the markets to chew upon. Most of the members, were, I mean, it was perfectly divided, FOMC, as far as if you look at the views of the members is concerned. And at the margin, there were less members on the dovish side and more on the hawkish side. Whether the inflation can be sustainably returned to target on the current conditions is some doubts expressed by most of the members as well. So a slightly larger group, in fact, believed that structural forces, notably enormous investment in the artificial intelligence cycle, will continue to keep inflation above the target. We have already mentioned about so many other costs now, other than just the oil, adding to inflation. So inflation is broad-based. So in this context, what you mentioned about South Korea also taking a hawkish stance on interest rates. Yesterday we also had the Reserve Bank of New Zealand raising interest rate by 25 basis points. And again, they are looking at the broad-based inflation pressure in the economy. So FOMC minutes did not provide much to the market, as I said. But overall, if you see the currency reaction for all these developments have been rather muted. Euro has stayed well above 1.14, or dollar yen. Yes, of course, it's the most vulnerable currency for spike up in oil prices. And besides their own fiscal issues that is keeping the currency on the weaker side, Japanese yields are also at the new 40-year high. So, other than these currencies, other than the yen's telling weakness, most other major currencies are actually range bound. Bigger volatility was, of course, seen in gold and silver. I think it's more of a reaction to the yields going up. And because in the last week we had seen a swift rise in these two metals, all those gains were given back. Still watching 3,700, 3,800 in gold as a medium-term strong base, and then for silver, just under 55. I mean, those are value buy levels which I consider. In the rupee, last two trading sessions, we have seen big swings. First, it was to the downside below 95 on Tuesday, and then towards a strong resistance zone to 95.60 yesterday. On Tuesday, we had seen a sudden rise in the rupee to 94.96, triggered by selling in the NDF market. But then, with all the geopolitical developments and the rise in price of oil, it has resulted to the resistance zone with RBI once again having to come in there to see that it does not weaken more. Now, whether the question remains whether NDF market, is going to eventually play the rupee on the on the stronger side, or rather to the shorter side of the USD INR. I think these developments keep a check on this that view. Although eventually market has once again started to see pickup in the flows, and that could keep the upside capped. Of course, so long as the market remains volatile, global markets remain volatile, it's difficult to see the rupee also gain substantially. We'll keep watching, of course, the reactions in the NDF markets in the coming days. But I think our contention is that 94.80 to 95.80 is going to be the new range for the USD INR. And we'll, of course, keep a closer eye to the geopolitical developments, because rupee still remains, if you ask me, more vulnerable to a weakness than to strength. Thank you.
Thank you, JK. And so rightly put that on Monday, we were looking for new developments. In fact, when we were making this podcast, I was having trouble as to what to, introduce and as a topic of discussion. But now we have more than enough, more than generally we can digest. But yes, on the sidelines of NATO summit, a lot of things happened. Trump, as usual, made statements not just on Iran but on Spain. Again, wanting Greenland too. So all of these, like pretty much old narrative we have already seen about President Trump taking a more confrontational approach. But the geopolitics, it has impacted markets. Oil has risen already 10% from its low on 3rd July. We have seen yields already moving higher. We discussed the asymmetrical relationship yesterday in yesterday's podcast. So inflation fears are more broad-based. We are seeing some rate actions, whether it's Reserve Bank of New Zealand. They raised rates yesterday. South Korea also seems likely to raise rates. Even the FOMC minutes, everyone was concerned about inflation. Uh, so generally, there is this broad-based fear that inflation is rising and rate action will need to follow. But overall, currency reaction has been muted. Rupee has seen good amount of swings both sides. Initially stronger on Tuesday, trading below 95, then weaker after the geopolitical development later during the week. As JK mentioned, 94.80 to 95.80 is likely the new range. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of our quotes.